In this lesson, we will talk about support and resistance, how we spot support and resistance on different time frames, and what is the importance of support and resistance. I tell my student to watch this lesson again and again until you fully understand it. The reason behind it, because support and resistance is a very crucial topic. If you miss this thing on your charts, you might lose your trade. If you don't mark your support and resistance accurately on the chart, you might lose your trade. So the best thing is to rewatch this lesson again and again until you fully understand it, and do practice as much as you can so you feel more confident while looking for support and resistance on different time frames and on different charts. So let's just continue. Support and resistance. Support and resistance zones play a crucial role in identifying potential price reversals in currency trading, often referred to as bouncing. So here we can see there is a support area right here. The price is coming down to this area and bouncing. Price came down to this area, bounced, came down, bounced. Determining these zones can be subjective as traders often focus on drawing precise lines as support or resistance levels. However, it is more effective to view support and resistance as zones rather than singular line. So sometimes we draw the line which represent our support level, but the best practice is instead of line, you should draw a box which will represent your support zone, and this box will act as your support area. So what is actually support? Support is the area where the price comes down to that area, and the buyers wait for the price to be there and they just buy back in the market. And what happens there, how they spot the support area. So what you need to do, always look left. Look left is a thing which you will hear me saying in all my videos, all my lessons. Whenever you start charting, you need to verify your support or resistance or something else by verifying by going left. When you go to left, what do you actually see? You see the history of the chart. When you see the history of the chart, what happens there? You see that, let's say your support area is at $1, and when the price is at $1, what happened last time when the price touched that $1? So let's say if it's getting rejected, if it's bouncing from that area, or actually what's happening. Let's say you see that the price, whenever the price touched the $1 figure, it bounced from that area. Second time it touched that area and bounced. So there are few of the touches on the $1 area, and you see the price bounces from $1. You draw your support level there, and next time when the price comes down there, you expect that the buyers are going to come there and they're going to push the price back up. Identifying support and resistance. How do we identify support and resistance? To confirm a support or resistance level, the price needs to touch that level multiple times and rebound. Support and resistance levels can be identified across all time frames. The monthly, weekly, daily, and 4-hour time frames are typically considered the strongest for identifying support and resistance levels. Resistance levels are always positioned above the current price, while support levels are always below the current price. When charting a coin, day traders should initially identify support and resistance level on the daily and 4-hour time frames before proceeding with additional analysis. So the thing which I was saying before, if you want to confirm your support and resistance, what you need to do, you need to go back to the history of the chart, look left, and see what happened when the last time price came down to the support area. Let's consider our support area is $1. So we will go back to the history and see what happened last time when the price touched that $1 area. Support and resistance can be levels can be identified across all time frames. So you might find support and resistance on all time frame, no matter if you are trading on 1 hour, 4 hour, or daily. You just need to switch your charts and find out whatever time frame you are trading. Monthly, weekly, and daily time frames are typically considered the strongest. So if there is a resistance or the support level on daily, weekly, or 4 hour time frame, we will consider this is the strongest area to break or to bounce. And there is another thing you need to remember. Let's say the price is at $1. Now, where is the support area and where is the resistance area? Always remember, wherever the price is, the resistance is going to be above that price and the support is going to be below that price. So in our case, support is going to be less than $1 below that price, and resistance is going to be above $1 above that price. So here is the key note. Remember this thing: when support is broken, it becomes resistance, and when resistance is broken, it becomes support. So uh, let me explain this thing in easy words. Let's say there is a support at $1, and whenever the price is going to touch that area, if it's that support, it's going to bounce from that area. It is going to stay support until it breaks that area and goes down below $1. So let's say we break that support area and the price goes down. It doesn't bounce from $1 and it just go below $1. So what happened there? Now that support is not support anymore, that became resistant. Similarly, let's say $1 is the resistance area. It will get rejected from $1 until it breaks that resistance area and becomes support. So when support is broken, it becomes resistance, and when resistance is broken, it becomes support. How do we draw support and resistance? So select a market and choose either the weekly, daily, or 4-hour time frame. Ensure that support is drawn below the current price while resistance is drawn above the current price. To find reliable support and resistance levels, examine the left side of the chart, look left, and identify areas where the price has touched these levels multiple times and bounced. When drawing support and resistance lines, focus on areas where the price has interacted with both candles, wicks, and bodies. If you are uncertain about the accuracy of your support and resistance lines, look to the left of the chart and check if your horizontal line aligns with previous instances where the price has bounced. So how do we draw the support and resistance? So let's say I am drawing support and resistance on 4-hour time frame. What I need to do, if I'm looking for the support, support is going to be below the current price. So our price is, let's say if it's at $1, our support is gonna below that area. And how we gonna spot that area? We're gonna go back, look left, and see below $1, which is the exactly the price where the price bounced last time. Let's say is it's 0.90, and we will draw a line there and see how many times price touched that 0.90 and bounce from there. So if it's bouncing before in the previous chart in the history, we will consider that area as support. And the next time when price is going to go below 1 and it's going to come down to 0.90, we will expect that there is going to be a bounce here, as this is our new support and buyers might be waiting there to buy back in the market. So what we need to do, we need to look left. We talked about this thing as well. And here is the same thing. If you are confused, just look left and make sure your support level is accurate. What is the importance of support? The buying force of traders is strong enough to overcome selling pressure at support levels. Buyers are more inclined to buy at these levels where drops in price have been rejected multiple times. Buyers may not want to miss out on a cheap price opportunity. So let me explain support and resistance in easy words. What is support and resistance? So the trading is actually a game between buyers and sellers. If you know how tug and war works, then the same formula you apply here. Whoever is going to be more in the market, either the buyers or the sellers, they're gonna win. Let's say there are more buyers in the market. So what are we gonna expect? If there are more buyers in the market, market is gonna go up. If there are more sellers in the market, market is gonna go down. That's how all the financial markets works. So sometimes you see fear in the market. What happened in the fear? Let's say BTC was on 70,000 and it dropped down to 60,000. What happened? People started selling their BTC. Why? Because they were in fear. They were thinking that, oh, if they bought it around 65 or 60 somewhere, they just don't want to lose much there. So they just start selling their BTC. In result, there are more sellers than buyers. There are no more people to buy at $60,000 price. So what happens in that result? The price goes down. Why? Because there are more sellers in the market than buyers. So the trading is actually tug and war between buyers and sellers. Whoever is going to be more in the market, they're going to win. However, keep in mind support does not always hold. A decline below support level indicate that sellers in the market have beaten the buyers, more sell orders than buy orders. So let's say we were expecting $1 is our support area and the price is going to go down there and it's going to be bounced. It doesn't happen always. Yes, even you verified your support level on the left hand from the left hand side by looking left, there are chances sometimes the price is going to come down to $1 and the price is not going to bounce from there and it will break that area. Why it will happen? Because at $1 there are not much buyers in the market at the moment. Now there are more sellers in the market, people who want to sell at $1 because they don't want to lose their money, so they are selling at $1, so they buy back in cheap price when the price is going to go down to the next possible support. So we don't have much buyers on the support level. When we break that support level, how we will find out if the support level is gonna be broken this time or not? Well, watch out the whole course and we will talk about that thing later on. Support and resistance example. Let's say this is our support area and this is $1. Whenever the price is gonna come down to $1, this is support, it will bounce, support, bounce, support, bounce, support, bounce, until we break this area. So this was our support until it's broken. We didn't hold here. We didn't bounce from $1. We didn't bounce from support. Now the support is broken and it came down to from support, and now this support became resistance. Why this support became resistance? Before $1 was bouncing the coin. Now $1 will reject the same coin and the coin will drop. Why? Because if you remember, there was a keynote there. When support is broken, it becomes resistance. When resistance is broken, it becomes support. So here in our case, the support is broken right here. It was bouncing before, but now this is broken. Now the price is not gonna get broken from get bounced from here. It will get rejected from here because this is not support anymore. This is the resistance. Here is the example of resistance. Let's say this was $1. Before it was support, now it became resistance. What happens every time price is going to touch that $1, will get rejected. Why? Because there will be more sellers than buyers here. Rejection, 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 until there are more buyers than sellers. So here there were more buyers than sellers. We broke this resistance area, and as you remember, when support is broken, it becomes resistance, and when resistance is broken, it becomes support. Now it was getting rejected here multiple times. Now once the resistance is broken, it came down and touched this area, retested, and bounced from here. Why? Because it was getting rejected there before. Before it was resistance. Now it broken this area. Now this is the support area, not the resistance anymore. Can I draw support and resistance lines like this? Of course not. Why? Because if you look at this chart, this looks really ugly to me. I can't make a decision here if I need to enter into the market or I need to exit the market, because the resistance and support level is really close to each other. So it's not really easy to take a decision to trade from here to here or here to here or here to here. So there are a lot of support and resistance here, which is not recommended. Always keep your charts clean. try to look for the major reversal areas, just ignore the minor support and resistance, and just look for the major reversal area wherever the price touches, bounces, and rejected. That's it. While it might be tempting to draw support and resistance lines at every rejection point on a chart, doing so can lead to confusion and hinder decision making. It is more effective to focus on identifying key support and resistance zones that are visible on higher time frames. By doing this, you can gain a clearer understanding of significant areas that are likely to influence price movements.